Good afternoon, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on nickel exploration and development today. We will hear from Mark Selby, President and CEO of Canada Nickel Company. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During this Canada Nickel Company webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the Canada Nickel corporate presentation, and that can be found on the company's website, canadanickel.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures pertaining to Canada Nickel Company. So we have Canada Nickel presenting today. The company has a portfolio of projects in the Timmins area. This includes its flagship Crawford project, where the company recently reported results of a feasibility study, as well as the past-producing Texmont mine, which the company has on a development fast track. And as well, they have a pipeline of other projects with geophysical characteristics and initial drilling results that are similar to Crawford. With that, I now turn it over to Mark to update our audience on the company.
Thanks, Tim. I will dive right in here. Very glad to have reached this major milestone for the company. I won't talk about the nickel markets today. To this recent milestone with Crawford, we think is not only a major milestone for Crawford, but in terms of our overall unlocking of what we see as Timmins Nickel District. With the geophysics that we have in place and successful testing of 9 of the targets, 3 of which are larger than Crawford, we truly believe that we are unlocking, an entire nickel district that will rival the world's largest nickel sulfide districts. Since the beginning of the year, very happy to have Anglo American as a cornerstone investor. Today's results with the feasibility study, $2.5 billion after-tax NPV, IRR 17%. When you throw in the carbon capture and storage tax credits that we expect to receive when we apply for them, the IRR pops up to 18%, and this is for a project that'll have a 41-year project life. Very proud of the fact that we are now the second largest nickel reserve and second largest nickel resource globally. In terms of the quality of the asset and ability to generate cash flow, you're looking at over $500 million of free cash flow annually over a peak 27-year period. So very few assets can match that kind of free cash flow generation. Through the latter half of the year, very, very happy with how our IPT carbonation work came together. We were initially targeting 1 million tons of CO2 captured and stored during our peak period. But when we did the final numbers, we got to over 1.5 million tons of CO2 captured and stored annually. The key piece there is, offsetting our gross footprint of about 5 tons, we end up with a net negative 30 tons of CO2 storage capacity per ton of nickel. And again, remember, Indonesia, most of the production out of there, has a footprint of anywhere from 50 to 80 tons. If it's from a smelting process, and if it's HPAL, you're looking anywhere from generally 15 to 30 tons. Again, our team has been rapidly advancing this project. We got from 5th drill hole to feasibility study in just 4 years. And on the permitting front, we're almost halfway through. We will be filing our impact statements in June of this upcoming year. And from that point, the government has 365 days to come back with a final answer. No other major nickel project in North America is at this advanced stage of permitting, and we truly are, one of the few new nickel projects that has the potential to come online, well before the end of the decade. As Tim highlighted, we've got a substantial land package, and as I said, we've been able to successfully test 9 of these. Crawford already is the second largest reserve globally, and we have 25 times the target footprint with which to explore. So again, we're quite confident that this is going to be a very, very large nickel district by the time we're done. Oops. In terms of nickel demand growth, I think just one thing I'd like to highlight, the demand, despite the increase in interest rates, despite the issues with China, despite the recent little bit of pause in terms of EV take up, we've seen growth so far, and we should end the year that our average growth over the first 3 years of this decade is somewhere between 9 to 10%. That's double what most analysts have had. And again, I'd like to remind people that we're really, in terms of nickel consumption in the EV space, we're really just getting started. As most of the growth to date has been in China and Europe with a lot smaller cars. And so those are fine to use LFP batteries in, lithium iron phosphate batteries. We're now just starting to see, the last month, even though global growth was just 25% year over year, we've seen 60% year over year growth in North America. And again, most of those are large trucks, SUVs, and cars that need nickel batteries to have the range that they need. If we're able to get out to 9 to 10% through the balance of this decade, we're looking at 6 million tons plus of nickel demand each year. In terms of carbon footprint, again, highlighted, sulfides are always work out to be fairly low footprint. The other piece that we've seen some recent news on in the nickel market, and just want to highlight it, is a few months ago, we saw Indonesia basically talk about clamping down on, quote, illegal mining activities and revoking some of the mining quotas that were there. My view is that that was a test drive of their ability to see what happens when they manage supply. We were expecting nickel prices to come off, but it has had the desired effect in terms of seeing ore prices move higher and NPI prices move higher in China. Again, the fact that those prices have moved higher, to my mind, we've had some recent very large surplus numbers quoted. I think they're missing the fact that there's substantial in-process inventories being built as new capacity for precursors into cathodes, into batteries, into the EV is being built out, and those numbers aren't being accounted for, in China and Asia. So in terms of the project, again, one of the biggest selling points all the way through has just been the location. We are just north of Timmins. We have all the major infrastructure in place in terms of highway, rail, water. We have 60,000 people within an hour's drive of the site. So again, in terms of a location to build a big open pit mining operation, it remains an excellent location going forward. And we've been working well through the first phase of the permitting process. In terms of the feasibility study, I've already talked about the NPV and IRR, but some of the operating metrics. Again, over that 27-year peak period, we're just under 50,000 tons of nickel per year and just under 1,000 tons of cobalt. We'll produce on average 13,000 ounces of palladium and platinum. And then in our magnetite concentrate, we'll be at 1.5 million tons of iron and 75,000 tons of chrome over that peak period. We will be, the mine was in operation today. We would be the only chromium producer in North America. Chromium is a critical mineral in both the United States and Canada. So a welcome addition, given the objectives of the Canadian and U.S. governments in terms of, trying to have safer supply chains for those critical minerals. Again, 41-year mine life, just under $2 billion initial capex, which was in line with our expectations going into the feasibility study. Very happy with where the all-in sustaining cash cost landed. Again, driven primarily by the scale of operation that we're operating at, offset by the byproduct credit values from the iron, chrome, cobalt, and PGMs. And again, in terms of the cash flow generation, already highlighted what this asset can do. In terms of the way the mine is built, in the PEA, we had done a 3-phase build. So we'd started at 42,000, go to 85, and then to 120. In this case, we're simply starting at 60,000 tons a day. A few years in, we twin the mill. We operate it at 120,000 tons of ore a day for another 27 years. And then during that time frame, while we're mining, we build up a low-grade stockpile, which we process at the end of the project life So there's no mining going on at that point in time. We're just, mining stockpiled material. Again, we're only using a fraction of the resource that we have today. So it's quite possible, that this main mining period might get extended in the future. In terms of where we landed, again, very happy, well into the first quartile of the cash cost curve, which is where you'd like to be and where majors like to find assets that they'd like to own. We're in the lowest decile of the carbon curve. Again, very happy with where that has landed. In terms of reserves, we are now the second largest nickel reserve. And again, that's just not sulfides, but sulfides and laterites. Again, speaking to the quality and scale of the asset that we have with Crawford. In terms of production, if we were fully ramped up today, we would be the third largest nickel sulfide operation globally, the largest outside Russia and China. And again, in today's world of having sort of supply chains in safe hands, we think this is a very key metric, and you can see where we stand relative to most of the existing producers in terms of the scale of what we're looking at doing. In terms of the resource, we had already announced a fairly substantial increase in the measured and indicated resource when we published our last resource in the spring of 2022. Very happy to see that continue to grow with the drilling there, up to almost 6 million tons of contained nickel with another, 3.7 million tons of inferred. One of the key components and one of the things we wanted to make sure we included in the feasibility study was our IPT carbonation process. For those of you who haven't heard the story before, literally the rocks that we have this wonderful quality that they spontaneously absorb CO2 when exposed to air. And this white mineral that you see here is the mineral called magnesite. It's a magnesium carbonate mineral. And how it gets on the rock is basically those magnesium silicate minerals reach out, grab a CO2 molecule, and spontaneously convert themselves into this new mineral. This is a very well documented mechanism to be able to capture and store carbon, and is very proud of my team that in just 14 months, we figured out how to integrate that into our process plant and integrate the ability to store 1.5 million tons of CO2 per year. With the work that was done from one of the leading strategy consulting firms, there's a substantial amount of demand in the future coming down the pipe. And, their view was we should be able to expect a minimum of $25 per ton for that material. But by integrating this process into the process plant, it sets us up to take advantage of the carbon capture and storage tax credit, which was created by the government back in the spring of 2022. First Nations, again, has continued to be a focus, and we continue to maintain excellent relationships with all of the local communities. In terms of timeline from here going forward, as I said, we expect to have our environmental impact statement filed by mid-2024. We'll be ramping up our activities now with the feasibility study complete with Scotia and Deutsche Bank and our debt advisor, Cutfield Freeman, to be able to get our financing package in place by 2024. Because once the impact statement is filed and accepted, the government has 365 days with which to come back with a yes/no answer on the final permits. So we're expecting those no later by mid-2025. The government has made a significant number of noises about looking to streamline permitting. The reality is this third stage, this third approval stage, is really the only thing of the three stages where there's a real opportunity to streamline the permitting. And so, there is the potential, that we could see those permits arrive earlier in 2025 than mid-year, which again, just help. Part of the reason we want to have that financing package in place by year end. It's a 30-month build, and we're looking to be in production before year end 2027. So again, all of this is just with Crawford, with the feasibility study complete, showing the value we have with Crawford. Again, every one of the colored names that you see on this page, is effectively one or more potential ultramafic deposits. We've had a very, very high hit rate as we've drilled the various deposits. Again, 11 of them are larger than Crawford, and we've successfully tested 3 of those already. and we expect to have a continued high hit rate, as we advance these projects forward. About a year and a half ago, we picked up the Texmont property. This creates some excellent optionality for the company. This operated briefly in the early 1970s. It was operated as a small underground mine. We think there's the opportunity here based on the historic drilling that had never been incorporated into a resource, plus the drilling that we completed during 2022, to be able to have a small scale open pit operation that could take advantage of some of the toll mills in the area, and some of the preliminary metallurgy has worked out to be quite good. When you look at nickel, there's really only half a dozen regions that drive the bulk of global supply, and we think there is the potential of Timmins to be able to join this list, even though still very early days at this point. Again, in terms of how new sources of nickel, new generations of nickel supply have come to market. The first generation was the big sulfide deposits like Sudbury that we as Canadians think about as the bulk of supply. That wasn't enough for what China needed in the early 2000s, and Tsingshan went about developing, integrated ore to stainless steel mills in Indonesia, and ramping up NPI production that was there. Again, these were not new discoveries. They were just taking drilling resources that were initially identified by Inco back in the late 60s, early 70s, and other companies, and taking advantage of those with their ability to build very quickly and relatively low cost. We think what we have here with these lower grade bulk tonnage ultramafics, is the new source of nickel for the next generation that wants low carbon from safe jurisdictions that's very large scale and very scalable. And that's the kind of thing that we have with the various deposits and targets we have in the Timmins region. We've seen a massive amount of corporate activity in the space. The last one with Wyloo Metals, where they stepped up to buy Mincor, which had been a standalone company for more than 20 years, for Aussie $760 million. The read-through valuation of that is over US $1 per measured and indicated pound. Again, we've got 6 million tons of contained nickel, or 13 billion pounds of nickel in the ground. So, you can see what the upsized value potential for the asset as well. And then BHP acquired Oz Minerals at the end of last year. And at that point, Oz had just finished completing the acquisition of the West Musgrave property and the engineering studies on that target. It's about the same nickel grade as us with some copper. It's in a very remote location in Western Australia, and the implied valuation for that asset, based on various ways of doing it, was over 2 billion Australian. So again, some significant upside value-wise from our current market cap. This year, we've accomplished a number of key things. First off, getting the strategic investor in place with Anglo American. We got Cutfield Freeman appointed as debt advisors in the spring, and they're all ready to go now that feasibility study is complete. We completed the fees. We've had a number of successes in terms of our district exploration. Key focus for us here is we are in discussions with the Korean battery supply chain and some of the OEMs, and we're keen to get at least one of these agreements over the line before year end. We are targeting having a Texmont resource and PEA out as well by year end. So we have the opportunity, if all the numbers shake out, that we'll be in a position to be in production by the end of 2025. And with the feasibility study complete, we can complete the remaining chapters of the First Nations impact benefit agreements. It's been a very exciting year for us. We think the next 12 months and 20 months until we get to a construction decision in mid-2025 is going to be equally exciting. I'd like to thank my team for being able to, again, take this asset from a fifth drill hole to a full feasibility study in just over 4 years, in less than half the time, and a fraction of the capital that most big mining companies would spend, pulling an asset of this quality together. And in addition to advancing Crawford, we look forward to unlocking what we think, could be one of the world's premier nickel districts with the Timmins Nickel District. With that, glad to answer any questions that you may have.
Great. Thank you, Mark, for the very informative presentation. We'll now start the Q&A portion of the webinar. A reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have several questions. First, looking at the government relations side of things. There's a question that says you had a meeting with the Minister of Natural Resources of Ontario. Were you able to get some positive feedback from that meeting?
Oh, we've had a number of meetings with a number of senior cabinet officials, both at the province and at the federal level. And, again, they are all very supportive of the project and our approach to advancing it. Now the feasibility study is complete, we can go in and have those discussions around additional, in terms of additional, beyond the critical minerals tax credit and the carbon capture and storage tax credit. We can talk about the one-off financing from the Strategic Innovation Fund, the Critical Minerals Infrastructure Fund, and a number of other funding vehicles that the governments have set up. And we are looking forward to getting that all together as part of the financing package for year end.
Great. How will Crawford's production offtakes be spread in terms of stainless steel market versus the battery market?
Yeah, we're probably looking to at least 2/3 going to the battery market. We'll have likely 2 offtake partners on the battery side and 1 offtake partner on the stainless steel side. And so, we think that's the appropriate mix. The key thing is, as we move downstream and work with, downstream partners to be able to get this material to market, we want to maintain the flexibility. So, we're able to move, basically 100% of the nickel between both the stainless, and battery markets. If for some reason things change in the future. And again, given the nice, clean, high grade concentrate we have, it gives us a lot of flexibility.
Great. And when would you look to have some offtake agreements perhaps in place?
Yeah, first one, we're hoping before year end. We're pushing hard. These things have been, in discussions for 18 to 24 months now. So we're getting close, and we're hopefully get one of them over the goal line. In any case, in any scenario, we're ramping up the full process now with Scotia and Deutsche Bank, and we would look to have the full package of offtake and financing in place before before year end 2024 or 14 months from now.
Great. Obviously, you already have a large resource, but would there be potentially any drilling below the open pit looking for more resources?
Not again, with the deposit being one of the largest nickel sulfide discoveries ever. At this point, we wouldn't be testing any deeper at Crawford. There is additional resource at depth already. That's not part of the existing mine plan. If we were going to spend exploration dollars, we would be looking at some of the other higher grade opportunities at places like Texmont, Bannockburn, Sothman, and as well, the big, giants that are, potentially bigger. I think everyone on our team, is of the belief that Crawford will not be the best project in this Timmins Nickel District. It will be the first project, but of that portfolio we have, I think everybody on our team has their favorite project. And, it would make sense to take those exploration dollars and start to unlock some of the value at those other opportunities.
Great. Looking at, obviously, you have an investment from Anglo American. Will they help play any role in the project before the final investment decision?
So right now, as part of the agreement with them, and it's disclosed in the releases there, they've got these future smart technologies that, they've got a whole portfolio of different types of technology that they think can add value. And so they're working through their test work to be able to see just how much value those can add on these types of ultramafic deposits. They've been very supportive, very positive with all the work we're doing to continue to advance the project, and we'll see what role they play going forward here. But they've been a good partner so far.
Great. One question here, looking at there's some overburden. Sometimes the holes are collared in mineralization, but there's also some glacial overburden in the region. How long would it take to remove the overburden? How thick is that?
Yeah, so one of the challenges with Crawford is basically the fact that it was underneath a glacial lake. for several thousand years. And so right across the Abitibi, you'll see anywhere from 5 to 50 meters of lake bottom, basically. So it's clay, sand and gravel, and other sediments. In our case, that 30-month construction build includes all of the pre-strip activities to get through that overburden layer. Again, we've got guys on our team who worked at Detour, who'd face similar challenges. And as I said, throughout the Abitibi, it's something that you have to wrestle with on a regular basis. So it's there. We have to dig through it. Wish it wasn't there, but again, that's what kept the deposit hidden until now. So, in the end, it was a good thing.
Right. Circling back on the offtakes, would the 3 offtake agreements take up all the production, or would that just still be a portion of it?
That would take up, I would say, the majority of it, but we'd probably want to keep some flexibility around being able to move some of those nickel units or iron chrome units into different markets and so forth. So ideally we'd like to maintain some flexibility as we go forward.
Right. And you did have a statement there about, everyone on the team having their favorites. Which of the properties does Mark see as the most potential?
So, I think, the two that we've tested so far that I think are have a significant amount of potential are Reed and Midlothian. Reed is a beast in terms of the dimensions of the resource. We haven't hit the edges of the deposit yet, and we're looking at a width of 750 to 800 meters wide and a strike length of a couple kilometers. And the big advantage of that is, when you've got something that's a little square, you end up with a much lower strip ratio, over the life of mine. So relative to Crawford, that Reed, based on what we're seeing, should have a lower strip ratio. And like the other deposit, it looks like there's a, higher grade, street seam running right down the middle of it. So Reed, we're quite high on. And then the other one, is Midlothian. It has a lot less overburden. The properties in the southern half, not always, but on average, seem to have less overburden than what we have around the Crawford area. So one, it has fairly shallow overburden. 2, again, it's the right kind of geometry to have a big open pit with a relatively low strip ratio. And then 3, so far it's only 4 holes, but based on the holes we've seen so far, the, dominant mineralization looks like it's a warite with some hazelwoodite. So, that opens up the opportunity to use, like an FPX like flow sheet, that's just doing magnetic separation as opposed to having to do both a lot of flotation and a lot of magnetic separation like we do with Crawford. And then in terms of the, some of the ones we haven't been able to test yet, the Southeast Man structure looks really interesting. That continues actually all the way on into the Newmarket territory. That it looks pretty interesting based on some of the historic work that's there. And then there's all the high grade little bits that there's still lots of opportunity to test. With Texmont and along that whole Texmont trend, we think there's a significant potential for more Texmonts, along that land package. And there's some nice little high grade bits at Bannockburn and Southman, that we'd like to explore it further in the future.
Great. We did have a few questions here about kind of looking at the CapEx of the project. Obviously, it's a substantial CapEx project.
Yeah.
And there was a bit of an increase from a fairly substantial increase from the PEA to the feasibility study. Can you give us a little insights on what contributed to that?
So the biggest part, obviously the PEA was 1.2 billion, but that was for a 42,000 ton per day mill. Normally, if you increase the size by 50%, if there was no inflation, you would have seen that. You would have only seen maybe 2/3 of that increase in capital. But obviously, over the last 3 years, we've seen a significant increase in inflation globally. The scale up, we added some additional process steps in the mill as well. And so, we're quite happy that, with the 50% increase effectively in throughput, we saw just over 50% increase, in the overall CapEx for that first phase. So pretty happy with where that landed. And again, in terms of the overall, total capital number, obviously the overburden, there was, when we did more geotechnical, there's more clay and less sand and gravel. So that requires more work on our front, as we build the mine out. But, other than that, those were the only sort of two negative cost surprises that we had.
Great. And then looking at that CapEx and fundraising and so on, I had a few questions about, can you comment on potential share price dilution and or not share price, but share dilution if you have to raise more funds with equity raises?
Yeah. So, with just under $2 billion CapEx and generally a 40-60, debt to equity split, we'd be looking for, $800 million of equity capital to get the project off the ground. One of the key pieces there is, we have some PGMs now and a concentrate that we would look to stream for a base metal operation. Streaming precious metals, particularly ones that have a 40-year mine life, can be a pretty attractive proposition. So, we see that bringing in $50+ million of capital. From the government funding perspective, again, we qualify for funding from the federal government, from the provincial government, and from the U.S. Department of Defense. And I would be disappointed if we got less than $400 million of equity type capital up front. And so, we're looking left there is $350 to $400 million. With the offtake partners, we could sell Crawford's production 6 times over by the end of this decade. There's no issue in terms of, being able to sell it. What we've been insisting on with people, if you want to offtake and you want to sign up now, you're going to have to write a check now to be able to get that offtake. And so, our view is, and in the discussions we're having, we're pretty confident that, between the various offtake groups that we want to work with, that should be able to provide the balance of the equity funding. If for some reason that doesn't quite get us all the way there, the third sort of big pocket that we would look to is, the big Japanese trading houses are back in the market. They kind of disappeared in terms of mining project funding for the better part of a decade, but they are back in the market and interested in doing, what I would call the sort of typical, Japanese structured deals where they would take 10 to 20% equity at the project level. And then have some amount of offtake associated with that, but through that project level interest, they buy into it at a pretty healthy, PNAV multiple, which again provides another big chunk of funding. So between the PGM stream, between the government funding, between the offtake financing, and then the potential Japanese type JV deals, it's quite realistic to put a stack together, that gets us that full $800 million capital number.
Okay, great. And we also had a question on having completed the feasibility study as an estimate of the cash burn rate going forward during 2024.
Yeah. So right now, the offtake deals that we're looking for is, the numbers that we're talking about with the group that we are looking to get over the line before year end, that comes to fruition, that will help us basically get us through most of the way through 2024. And then with the other offtake deals in place, our hoping is that the initial payments that they will make on signing effectively cover off any funding requirement we have between now and mid 2025. If we had to go to the market to do it, we would really look at whether we would go ahead with it at this point in time, given where our share price is. At the end of the day, you don't necessarily want to do a lot of dilution, particularly at these price levels. So, we'd see how we go, in the scenario where these offtake groups don't come through.
Did have one interesting question, but obviously you mentioned the other projects, including Reed. Would there be the potential to locate the mill between Reed and Crawford to potentially feed a central mill for multiple deposits?
Yes. I mean, at this point, literally we're 20 months away from making a construction decision on Crawford. So, at this case, Crawford's too far down the path to be able to make any change in terms of the site layout. We are going to build Crawford as Crawford, unless we hit some super high grade stuff somewhere, that's going to be, Crawford will go as designed today. That being said, Reed is really one of the only deposits that is close enough to Crawford that, there may be the potential to convey it or rail it over to, the Crawford mill in the future, from the Reed Reed deposit site. The challenge, with lower grade material is you can't ship it very far, because the cost of shipping it, erodes, that value can erode the percentage of that value relatively quickly. So, with Reed, there is that opportunity. But most likely, most of the targets you see, again, given the scale that they are, you'll see, we'll see standalone mills, for a number of the deposits if things work out the way we are hoping.
Great. And one question here: how much chromium do you have at Crawford?
Yeah, so in terms of annual production, we're looking at 75,000 tons per year during the peak period. And just over 2.5 million tons life of mine. That would represent 15% of North American consumption today. So, it's a pretty meaningful part, meaningful contributor to North American demand. All of the primary material is imported today from South Africa, Kazakhstan, Turkey, and other countries. So, again, any domestic mine supply will be a welcome addition to the North American continent.
And we did have some questions, obviously shifting a bit here, but we had some questions on Texmont, and when would we expect a resource estimate there?
Yeah, so we're targeting having a resource estimate and PEA out by year end. So that we remain on track for that. It'll be pretty close to year end when it comes out, but again, we were happy with the drilling and what we saw in the drilling. So, obviously our team was pretty focused on getting the Crawford feasibility study out the door. So now that that's out the door, we can turn our attention to Texmont, we'll try and get that out the door as soon as we can.
And can you tell us a bit more about the plans for Texmont? Obviously, you had acquired it, and there's the potential to fast track there as it's got the historic permits and so on. Yeah,
exactly. So it ceased production in the early 70s, but the owners of the property maintain the mining leases, all the way through. And so that just simplifies. We still have to go through a permitting process to be able to restart it, but it simplifies the amount of work that's required. We will start it up at a level that, just requires provincial permitting approval. So we won't have to go through the federal process at this point. And so, from our perspective, we think it's we would, literally we can contract mine it. There's, people who can operate trucks and shovels at that kind of mining rate that we'd be looking at in the Timmins District. There's a couple facilities nearby that could toll mill it. So we would also toll mill it initially. And so, we see it as a low upfront CapEx way to generate, a few thousand tons of nickel production a year and create cash flow, while we're waiting to get Crawford going. That's just the initial small scale phase. Again, given the scale of the resource that's there, it's quite conceivable, that you could see a 10 or 15 or 20,000 ton a day standalone milling operation, at Texmont, somewhere in the future.
Right. And a couple of different types of questions. Have you looked into bio-leaching approach as EV Nickel is exploring in the area?
At this point right now, we're basically sticking with proven in terms of, basically SAG mill, your classics, crush, grind, float type approaches. And then on downstream processing, we'll look to basically, most likely to pyrometallurgically process the material. Again, there's a bunch of processes out there that have a very low environmental footprint, and can deliver, deliver the products that both the stainless steel market and the battery market needs.
Okay, great. And we did have one question. obviously, hand in hand with maybe offtakes or things, but have you had any interest in third-party manufacturers wanting to locate facilities near the mine?
In terms of the next stages of processing, that
I think that's what's implied. Yeah.
Oh no, very much so. The North American continent, today, in North America, we consume, roughly 130, 140,000 tons of nickel per annum, plus or minus, and depending on where you are in the aerospace cycle or the stainless steel cycle, that number fluctuates up and down. The reality is with all the battery plants that are currently under construction and or committed, you're going to see nickel consumption in North America climb, double or triple, to 300,000 to 400,000 tons of nickel per year by the early 2030s. And so we not only need a bunch of new mines, we also need a bunch of new processing capacity. So there's a significant amount of interest from the different groups that we're talking to about partnering in terms of getting, the concentrate into a form that they can use directly into their battery plants.
Okay, great. We did have a question here, kind of circling back. You had discussed it earlier, but kind of to reiterate, that's about how much of the offtakes, how much of the capex, the cost of the mine, would you expect the offtakes agreements to cover?
Right. So just under $2 billion total, of which we would need to raise roughly $800 million in equity capital. And the offtakes, we think would be anywhere from a quarter to half of that number, most likely.
Great. And then one question here. It says, given the path forward is usually a dead period for the stock, may or may not be the case, but when you get into development, there are stages where news flow slows and different things. But do you have some strategies or approaches to kind of look at your portfolio and maybe sell projects or different things to kind of get through some different options that you might be looking at to further fund things?
Yeah, no, I mean, the great thing for us is, is having the, portfolio of 20 plus properties. That gives us a significant amount of flexibility. So, to that question, we can decide to joint venture a single property. There's some natural clustering of deposits. If you look at the map, we can joint venture, the different clusters that are there. So, again, we'll continue to unlock value as we move forward. For now, we're content to hold on to everything and maintain the maximum optionality as we re-rate. But, we'll adjust our strategies based on what the, market for funding looks like. But so far, what we've got in the hopper, we're pretty confident that we can, keep everything we have and get the money that we need without much dilution.
Okay, great. One question, I'm kind of was holding this one back a little bit. You're quite knowledgeable about the nickel market in general. Yep. And we have one question that's more generally, do you have some insight into what is happening in the nickel market in Indonesia?
Yeah, so, Indonesia, so we've sort of gone through one big wave of supply, which has come from mining the saprolite layer, which is the lower layer of these laterite deposits. And that's been transformed into nickel pig iron and now being converted into matte, which can be, either used directly by battery companies or further upgraded and used by battery companies at that point in time. The government has now sort of put a ban on, new NPI projects. So, the capacity that's in the pipeline is what we're going to have going forward. We were just starting into a second wave of supply. So there's the limonite layer, which sits on top of the saprolite layer. They're mining that today and didn't have a home to process that today. That's the layer that they're going to use with pressure acid leach technology to be able to recover the nickel and cobalt in those layers. So there's been a new wave of additional capacity expansions coming online, and will continue to come online over the next 2 to 3 years. The key thing here is, we are going to see millions of tons of additional nickel supply coming from Indonesia. The reality is that, until, project like Crawford, it hits the market, they are literally the only source of incremental nickel supply. And we need a lot of at 9 to 10%, we're talking about almost 300,000 tons of additional nickel per year. So even with these bigger HPAL plants, we need, 2 to 3 or 4 of them per year just to keep pace with what nickel demand is going to be. The key piece here, and why I don't lose much sleep about what's happening with Indonesia, first off, in terms of these HPAL plants, the cobalt value is a big part of the overall value equation for those deposits. The cobalt market is currently in a big surplus. I was talking to a number of people during LME week in London last week. You've got several new big mines coming online in the Congo, built and operated by Chinese companies. And then from these HPAL plants, the ratio of cobalt to nickel is in the global market is roughly 1 ton of cobalt for every ton of nickel. But these HPAL plants, they generate 1 ton of cobalt for about 10 to 15 tons of nickel. So these HPAL projects are going to have a far bigger impact on the cobalt market before they start having an impact on the nickel market. And the value of that cobalt, has a big impact. You can go look at Nickel 28's Ramu project, or you look at Sherritt's operation in Moa and see what the different cash costs look like at different cobalt prices. And you can see the kind of impact that it has there. The other key thing to keep an eye on, and again, why I don't lose sleep over what's happening in Indonesia is, the average ore grades for the saprolite, so that the stuff that's converted pyrometallurgically, a lot of operations there are now down to 1.5 to 1.6% ore. The first operations operated primarily on 1.8% ore. Nickel Industries is a company, Australian listed company that has, basically interests in various Tsingshan operations. And so they also operate their own mines. And so I use them as a decent proxy to see what's happening with ore grades. And from their own mines, they went public in 2019 or 2020, and they were producing over 2% nickel at that time. And now they're down to 1.55 to 1.65% nickel. So that decline in ore grades is very real and effectively derates the capacity that's being built. So, and that ore grade decline is not going to slow. Laterite deposits, because they're not very thick and they're spread out over a large lateral area, it's very easy to go and pick out the bits of those deposits that are the highest grade first. And the Chinese have been aggressive, and the Indonesians have been aggressively doing that since the mid 2000s. So, we'll see. So Indonesia's they're going to be the dominant player in the market. Oh, sorry. And the third reason is, it's in their interest to maximize the value they have from these limited resources. Unlike a sulfide deposit, like we haven't hit the bottom of Crawford yet, and who knows where the bottom goes. It might be several kilometers down. With a laterite deposit, it's basically a bunch of soil sitting on top of rock. And when you get through the soil, you've hit the bottom of the resource. And so it's very much in Indonesia's interest to maximize the value that comes from that limited resource. They talk about it in those kinds of terms. And as I said in one of the slides in our investor deck, I expect, that you will see, similar to OPEC, that you'll see Indonesia manage the amount of nickel supply that comes out of the country by managing mining quotas, setting index prices in Indonesia so that Indonesian miners get more of the value as opposed to Chinese processors. So all of those things, are going to contribute to, that there'll be lots of room for, projects like Crawford to come to market, and generate some pretty significant returns.
Okay, great. And we do have another question, same part of the world, but how do you view the mining issues in New Caledonia? So
it's quite sad, actually. I mean, it's an island. It's a French colony. I was at Inco when Goro was approved, and I wish I had saved the email that I sent to say what a bad idea it was. It's just a very challenging jurisdiction. So you literally have, European level wages and cost of living with developing world productivity. There's some significant political divides between the north and the south of the country, which makes the politics very complicated. And then you also have the joy of colonial European bureaucracy, which makes it also very difficult to accomplish things. And so, not surprisingly, you've got people get hung up on high grade. The Goro was the highest grade limonite deposit in the world that could be pressure acid leached. Koniambo is the highest grade saprolite deposit that could be pyrometallurgically processed. And both of those assets couldn't make any money. Goro soaked up $10 billion US of capital, and Koniambo must be close to that number, if not higher than that number today. So you've got $20 billion that have been invested over the last 15 years, and with assets that failed, to today to still come anywhere close to nameplate capacity and anywhere close to generating, any kind of substantial cash flow. So, those assets will wind down. We'll see how much ore gets exported out of there. But again, 15 years ago, those were potentially big parts of the overall nickel market. The fact that the nickel market's, doubled in size since those things started up, they're not nearly as significant, a player in the market going forward. So, it's too bad for New Caledonia, but I think it'll be structurally difficult for them to generate much nickel out of the country.
And one question here, you had mentioned kind of the processing and what it takes to get kind of the battery product from your concentrate. What is the next step of downstreaming to get it to battery level?
Yeah, so we would look, and we've got various approaches that we're looking at to basically get it to matte. Once it's to matte, there's a number of precursor makers who are using matte directly today. We're also having discussions with them about roasting that matte and delivering a high-grade nickel oxide, which the precursor companies that we're talking to seem quite interested in having. The challenge has been over the last few years, people got started with nickel sulfate as a main product just because it's a highly soluble, relatively high purity material. The difficulty is it's only 22% nickel. So it's a pretty low grade product. What you're shipping is a lot of sulfate ions and a lot of crystalline water. And so the challenge for the precursor guys, when when they're using nickel sulfate as a feed, the first thing they do is use soda to basically, pop the nickel off the sulfate and get rid of the sulfate. But what you end up with is literally 4 to 5 tons of sulfate for every ton of nickel that you produce. And in countries like Korea, having a lot of solid waste to get rid of, is a real problem. And so, having high grade nickel products that don't generate that kind of solid residue as a feed is quite compelling for these precursor companies. So things have continued to shift to use matte and MHP directly, and that's a trend that's going to continue, over the next 2 to 3 years for sure.
Great. Well, I think that's all the questions we have. Maybe just kind of to summarize, just to review, what news or main catalysts might we expect to have over the coming months from Canada Nickel?
Yeah, so you will see a Texmont resource PEA out by year end. We are getting very close in getting that first offtake deal in place, and we expect to have that in place before year end. By mid-year next year, you'll see us having successfully filed the environmental impact statement, and then you'll likely see into 2024 some additional regional exploration, from the other properties that we've got going forward. So again, another jam-packed 23-24. Great.
Well, I'd like to thank Mark Selby for presenting today, and thank you everyone on the line for tuning in. Reminder that Red Cloud Securities will be back Monday morning when our webinar series continues with F3 Uranium presenting Monday, October 23rd at 11 a.m. Eastern Time. Have a great rest of your day.
Thanks, everyone.